Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magd.com, www.dayprotrader.com, www.24elliottwaves.com. The title of the video is how to use Fibonacci and market geometry like a pro. How to use Fibonacci and market geometry like a pro. Let's get started. All right. We use a Fibonacci retracement. We also use a Fibonacci extension. We also use Fibonacci patterns. To master Fibonacci trading, I recommend to trader to visit our website dayprotraders.com, where one can learn how to use Fibonacci like a professional trader. In this video, we want to combine a Fibonacci retracement and market geometry. Okay, how one can combine Fibonacci and market geometry like a pro, like a professional day trader, professional swing trader. Okay, very, very important. The difference between professional traders or advanced traders and ordinary traders is that, professionals use what we call market geometry. When we are talking about market geometry, we are talking about, channels projection. Let me explain myself to you. I'm going to go very slowly now, you see. Suppose the prior one, we know that we have three market patterns. Okay, the first market pattern is the rising channel. Okay, the second market pattern is a declining channel. Okay, and the third market pattern is the horizontal market pattern. Okay, so we have three market patterns. All right. Suppose the price was in a horizontal channel going ups and down between two key levels. If the price goes above this channel, finally, if it breaks above this channel, professional will measure the width of this channel. As soon as the price goes above or breaks above this horizontal channel, they will project this channel, the size of this channel, to the upper side. So this is the measurement now. So they will project this channel to the upper side. This is what we call a market projection. This is what we call market geometry, the projection of channels. All right. On the other hand, if the price breaks down below the original horizontal channel, professional will project equal size of the previous channel to the downside. If you are using the slow stochastic, you are using the RSI, you are using the CCI indicator, you must use market geometry, which is the projection of the channel, to dictate the best oversold and overbought zones. All right. So if the price goes above, an horizontal market channel, we will project the channel equal side to the upper side. If it goes below it, we will project the channel to the downside, equal side to the downside, to determine the next target price. On the other hand, if the price was in a rising channel and the price breaks above standard, you see, it's going very, very fast, and then it comes out, it breaks above the upper side of the rising channel, we will project, you see, the width of this channel is this, yes or no? So we draw it like this, equal size like this, and we project it to the upper side if the price breaks above, the upper side of the rising channel. This is about the market geometry. If you are trading and you do not know what is a market geometry and you are not applying this simple tool, you are likely to go round and buying and selling the stochastic anyhow and distorting the market like the high frequency traders. So if the price is going up, blah, 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 in breakouts here, we will project the channel to the other side. If you break above the second channel, we do exactly the same thing and draw another channel again, right here, equal size to dictate, the price target zone. However, if the price dip below the previous channel, so our original channel is the middle one here, if it breaks down below the channel, we will project the channel equal size to the downside. All right. On the other hand, if you were in a declining channel, if you were in a declining channel, and the price finally failed to find a support on the lower part of the declining channel, we will project the equal size. So we will do again exactly the same thing. You see here, we measure the width, and then we just project it here and draw another line that is parallel to the other one. So we have the projection. So price going down, blah, 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 blah. Finally, it breaks down. Okay, it breaks out of this declining channel. We'll project the channel to the downside. This will allow us to set a target price, and to detect a hidden support and resistance level. On the other hand, if the price was in a declining channel like this, and finally it breaks out, which means it finally found a support and come out of the declining channel, we will project it to the other side. This is about the market geometry, the projection of the three market pattern. I recommend to TSTW24 traders and other traders to use the market geometry, which is the projection of the channel. There are more to the market geometry, but this is the the bread and butter, so to speak, the bread and butter of market geometry. You get a picture now. So I'm going to go back now to the chart. I'm looking at the Euro USD, and we are talking about how, to use Fibonacci and market geometry. One of the tips that we can use when we are using, Fibonacci retracement, by combining the Fibonacci retracement and the market geometry, we are likely to know, where are the support, the hidden support, and the resistance level. My recommendation to traders when they are using Fibonacci retracement is just draw the Fibonacci retracement, and highlight all the key level, especially the 38.2%. The 50% is the third psychological price level. In fact, I received an email for one trader today about the psychological price level. The first psychological price level is what? The low before the last low. The second psychological price level is the high before the last high. The third psychological price level is the 50% Fibonacci retracement level. But when we draw, you see here, the price went up from here all the way up here. So we just draw the line all the way from the beginning to the end. If it's going down, we draw again from the beginning to the end. And here we can see the Fibonacci, retracement. This is the 38, the first horizontal line here. It's a 38.2% Fibonacci retracement level. No, this is the 23.6% Fibonacci retracement level. Then we have the 38.2% level. This is the horizontal line here, where my cursor is. Then we have the 50%, and then we have what? The 61.8, and then we have 78%. I use exactly 78%, and you may disagree with me. And then you have the 88.6%, and then you have the 100%. Just have it like this and know where are these Fibonacci retracement level. But now, how do we combine the Fibonacci and, the market geometry? I want to do a quick demonstration here for you using the Euro USD currency pair. Though I'm using a currency pair here, this strategy is valid for commodity, for futures, for ETF, for indices, for any financial instrument. I'm going to check quickly my time because I don't want to go over my, a self-set limit of 20 minutes. So I'm doing okay. You can see that the euro went up from here all the way here. I have posted a video at the goo.gl channel today, because this video is posted at the Day Pro Trader channel. But I have recorded a video that I posted at the goo.gl channel, which you can check. Subscribe to our channel to know exactly what is going on in this messy market. So you can see that the euro went up from here all the way here, all right? And I talk about, the euro-dollar trend and the market sentiment at goo.gl channel. So check it out. So you can see here that the euro went up from here to here, So we draw our Fibonacci, tool. We have all the retracement lines, which are the horizontal red lines on this chart, the dotted lines here. You can see them here. We have them ready. How do we trade it? We want to combine the Fibonacci and the market geometry. What is happening here? How do we handle that? Though you can see that the price was in a rising channel here. One scenario, I don't want to use my, horizontal channel in this case, though we can use it, but I do not want to use it here because I want to show you something else. You see, this is a channel. So it did below it, what do we need to do? We measure the width of this channel, and then we just project it, right here, and then we draw another line that is parallel, to our first line, yes or no, equal size. So that's the first projection. So it did below it again. What do we need to do? Exactly again, we do exactly the same thing, and then we project it again right here. This will allow us to set a price target and to know whether they're hitting support, because the price is going down, the price is looking for a better support level. This is one support here, the projection of the first channel. So the ultimate target here. Do not forget also the median line of the channels. These are hidden support and resistance levels. Do not forget the median line. So for the last channel, the median line is somewhere here. You see how the price acknowledge it. You see how this is the median line. You see here we have this doji here, but finally it crashed below it. This will happen very often. If the market, I'm going to say something very important, and I want traders to pay attention, please. Okay, if the market sentiment is bearish and is supported by fundamental reasons, the price will fail to find a support. So we have a bearish market sentiment related to the euro, supported by the Fed, the ECB cutting interest rate, starting quantitative easing. The price has a high chance to break support level. So that's why here you see here, the median line of the last channel is stopped here, but quickly continue. So next target should be here. But I don't want to use my rising channel as for the market geometry. Okay, stay with me. I want to show you something else. For traders that are following us, I also talk about what we call the cycle point. These are very, very important key levels. You can see a cycle point on any time frame, 2-hour chart, 3-hour chart, 4-hour chart, hourly chart. You will see a cycle point. I explained this already. I jot to your channel. I don't want to dwell on it. I will go swiftly. See here, the Euro USD went down. Right here, went down. Yes or no? Went down. Down to this point. All right. And again, it went up all the way here. Though you see this line here is this is the smart media line for the Euro USD. All right. This is the smart media line for the Euro USD at 13416. That's the orange line here. But it happens to be, again, okay, the cycle point, okay, is also a cycle point on this weekly chart. So we have a cycle point that is equal to the smart media line, but the price failed to find a support here. Remember, market sentiment supported by fundamental is bearish for the euro. The euro is just going down until the market sentiment, okay, will change. But you see, pay attention to the orange line. As the price goes above, whenever the price goes above a cycle point, the price is likely to start something else. We may say a new cycle or a new pattern. Okay? So after the price goes above the cycle point, what has happened? Okay? After it goes above the orange line, we can see that there was a kind of consolidation. So what I'm going to do now, you may disagree with me, so we can say that there is a consolidation. So I'm going to call out that line, into orange again. Remember, the first line is the cycle point at 13416. It's also the smart media line for Euro USD. So we have what we call a balanced market pattern or horizontal market pattern, which is the orange horizontal line. Instead of using the rising channel for my projection, I will use the horizontal market pattern here, because the price went above the cycle point. Look, this is my measurement for the horizontal channel, yes or no, the orange one. So price dip below the orange channel, what do we need to do? We project it equal side. Okay, it makes sense. So we'll draw another line here. So the euro is now at a support level by projecting the orange line to the downside because it goes below it. This is how we combine, the Fibonacci retracement and the market, geometry. So also you can see that the line here, you can see 61.8. Let me remove one line here. I hope you can see it. 61.8 is right below this orange line here. It's the dotted line. The dotted line, can you see it? The dotted line below this orange line here, this is the 61.8%. Fibonacci, you see here, 61.8%. Fibonacci retracement level. So the price is at the 61.8% Fibonacci retracement level, but also at a support level, which is the projection of the orange line. So we know that the market sentiment is bearish, so there is a high chance that the euro will go below this level. But we need to be careful. We are not assuming anything. If we find a support, yes, this is a good place to buy, but we know that the market sentiment is bullish. You are buying, be careful. All right, be careful. There's a high chance that it will dip below it unless the market sentiment has changed, or it may go up for a while before coming down again. So if it dip below the last orange line, market projection, market geometry, in really with the Fibonacci retracement. So crazy Fibonacci trader will quickly try to buy here. So some trader will try to buy 38.2. Didn't work because market sentiment is bearish, supported by some fundamental, 50%. It crashed through it. And okay, now we are at a 61.8%. But by projecting the first orange channel, we are now on the edge of the second orange channel, which is a support level. It's also a normal key level where the price did change direction here. So be careful. So for traders that want to sell, we prefer to dip below, retest, and turn around on the edge of this orange line. So if we dip below the orange line, what do we need to do? We will project again the channel to the downside, equal side. We will keep doing this if the euro continue to go down. This allows us to set a price level. Trader who sold it here will expect it to come here. You see, that's why they take profit also here. This is also a conversion point, you remember, because when we were projecting, okay, the rising channel, this was somewhere here also, you remember? Okay, the orange line, okay. This was also, okay, a hidden support level when we were doing the projection for the rising channel. You remember this, okay, doji, this doji here was near the median line of one of the channels. But now we're on the edge of this, the projection on the first horizontal channel right here. If we dip below it, the next target is right here at 12315. That remains to be seen. The price now in a declining channel, okay. So the market pattern is bearish. One thing I show to traders when you are using Fibonacci retracement level, you want to buy. Allow the price to come out of okay, the declining channel. So the price is going down, it's in a declining channel. You want to buy, you want it to go out of a declining channel. We are on a weekly chart, or at least if you are, for instance, on a 30-minute chart you want to buy, you want it at least to come out of okay, the declining channel, okay, on a 30-minute chart, break above, retest, and turn around. This is how one can use Fibonacci and market projection to make excellent decisions on the edge around key levels. To summarize this video, one can combine Fibonacci retracement level instead of buying and selling anyhow, like a crazy trader, at any Fibonacci retracement level, 38.2, 50%, 61.8%. The best approach, because professionals use market geometry a lot, it's better to combine the market geometry and the Fibonacci retracement level to detect the best trading zones. All right, it makes sense. We can use market geometry on a 2-hour chart. We can use market geometry on a 10-minute chart. We can use market geometry on the daily chart. All right, to make excellent trading decision. This is how we can combine Fibonacci retracement and also Fibonacci retracement and a market geometry. To avoid Fibonacci trading mistake, it's very, very important for traders to use the market pattern. So price, you see here, is going down. Yes, sir, it's going down. It's in a declining channel. If you want to buy, allow it to go out of the declining channel. Break above, retest, and find a support. All right. Do not force it. Do not just buy at the Fibonacci key levels. Okay. Use the market pattern. Use the market geometry together with the Fibonacci retracement. I hope you have learned something from this video to make an excellent trading decision. When we want to trade, we must always follow what we call the trading drill. Look for a setup. Wait for the signal and select a low-risk entry point. Without a valid setup, there is no winning trade. So the setup now is that the price is at a support level. Two things can happen. You can find a support there, or you will fail to find a support at that support level. If you want to sell at the support level, we want it to go below that support level to retest it, to turn around, or at least the price to display a new lower high on the edge where we will look for opportunity to sell at a low risk entry point. Sometimes we may see excellent setup, a valid signal, but the risk may be high. We may stay away. You want to day trade, wait for the market to open. The first 2 hours is the best time, okay? Always use stop loss and control the risk because it is your money. Do not throw money at it because especially new traders who do not experience big losses, so they have enough money, so they're throwing money on it. By the time you know, you lost 10,000, you lost 20,000. That's not the best way forward. If it's not working, pull out, go back to goo.gl, go back to our 2 channel, go back to the blackboard, use a demo account at FSCM or your broker provide you with a demo account, okay? Work on it, the setup, the signal, and the low risk entry point. Do not violate the market pattern. This is about how to use Fibonacci and market geometry like a professional trader. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.